Assalamualaikum everyone, this is Rukhsa Jahan. My student ID is 2012437151. So today I am going to discuss about the overview of the last monetary policy of Bangladesh Bank. So first of all, the summary of the last monetary policy declared by Bangladesh Bank. Number 1, monetary policy objectives. Then price stability. The primary objective is to control inflation with a target range to ensure macroeconomic stability. Then economic growth support. The policy is aligned with the government's growth objectives. Exchange rate stability. Aims to maintain a market-based exchange rate while limiting excessive volatility. After that, financial sector stability seeks to ensure a sound, efficient, and stable banking and financial system. Then, key policy tools: policy interest rate, repo and reverse repo, adjusted to influence money market rates and control inflation. Then, CRR and SLR, cash reserve ratio and statutory liquidity ratio, are tools used to manage banking sector liquidity. Then open market operations, buying and selling of government securities to regulate liquidity in the system. Then forex market intervention, occasional intervention to manage excessive exchange rate volatility. Then current policy stance 2015. Tightened stance. A tight monetary stance has been maintained since mid-2023 in response to inflationary pressures. Then focus on inflation control due to persistent inflation driven by import cost and supply disruptions, and the policy remains cautious. Interest rate corridor introduced. A market-based interest rate framework was introduced to enhance transparency and monetary transmission. Then exchange rate policy, market-driven exchange rate, a managed floating or crawling pay system with occasional interventions. Then unfiled exchange rate system, efforts are underway to rationalize and unify multiple exchange rates. Then digital and green initiatives, digital payments, expansion of mobile financial services and digital banking under the Digital Banking Bangladesh initiative. Then green banking and ESG, promotion of environmentally sustainable investments and mandatory ESG disclosure are encouraged. Then significant changes compared to the previous policy. First of all, fiscal policy, increased public investment, focus on infrastructure, education and health, financed through domestic revenues and foreign aid. Then tax reforms, implementation of digitalized VAT system including e-invoicing and online VAT return submission. Number 2 is digital and financial inclusion policy. Digital Bangladesh initiative, expansion of mobile banking, regulatory improvements in e-commerce and startup funding. Then central bank digital currency. Bangladesh Bank is exploring digital currency options as part of fintech reforms. And tools used by Bangladesh Bank. Number 1, quantitative tools, which is also general tools. Repo and reverse repo rate. Repo rate, the rate at which banks borrow from Bangladesh against government securities. Then reverse repo, the rate at which Bangladesh Bank borrows from commercial banks. Number B, cash reserve ratio, CRR, a mandatory reserve banks must hold in cash. A higher CRR reduces liquidity and helps curb inflation. Statutory liquidity ratio, a portion of NDTL that banks must hold in liquid assets to maintain solvency and control credit flow. Open market operations, buying or selling of government securities to inject or absorb liquidity from the financial system. Number E, bank rate, the long-term lending rate of Bangladesh Bank influencing overall credit conditions. Number 2, qualitative or selective tools. Credit control measures, sectoral credit guidelines to promote lending in priority areas such as agriculture, SMEs and exports. Moral suasion to encourage banks to follow desirable practices. Then margin requirements used to regulate speculative lending by altering the loan to value ratio. Then interest rate policy. policy, introduction of the smart paced reference rate to guide interest rates in a market oriented manner. Then other modern tools, foreign exchange management, intervention to stabilize the exchange rate and manage external shocks. Liquidity Adjustment Facility, a framework to manage short-term liquidity mismatches using repo operations, standing lending deposit facilities, overnight borrowing and deposit mechanisms between commercial banks and the central bank. Then policy reforms needed by my understanding. 1. Strengthening monetary policy transmission. Here the problem is weak transmission due to administrative controls and underdeveloped money markets. And the reform needed, deepen financial markets, allow greater interest rate flexibility, then encourage secondary trading of government securities. Number 2, modernize exchange rate regime. Here the problem is distortions due to partial control, and the firm needed, adopt a unified and flexible exchange rate regime and build forex reserves through remittance and export initiatives. Number 3, reform the banking sector. Here the problem is high NPLs, poor governance and weak regulation, and the reform needed, strict loan classification standards, transparent and accountable bank governance, restructure or consolidate weak banks. Number 4, improve fiscal monetary coordination. Here the problem is disjointed fiscal spending undermines monetary policy, and the reform needed, established a coordination council, adopt an inflation targeting framework aligned with the fiscal strategies. Number 5, expand financial inclusion via digital banking. The problem is limited access to banking and credit, and the reform needed, promote digital and agent banking, strengthen fintech regulations and consumer protections. Number 6, promote green and sustainable finance, and the problem is environmental risks are under integrated, and the reform needed, mandate ESG disclosures, encourage banks to adopt green lending pictures. That's all from me. Thank you.